Hello, this is Mike Wade and welcome to this week's video featuring yours truly and Tom's Tools. Stock and options trading has large potential rewards but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose, and remember, I am not an investment advisor. I'm a trader just like you, and please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise, and please read the balance of the disclaimer at your leisure. Alright, so today we're going to talk about the doji pattern, the doji candlestick pattern. As you may know, candlesticks are an art form in and of themselves, invented several centuries ago in the Japanese rice market. And the doji pattern in and of itself, there's many other patterns, of course, in candlesticks, but the doji is really an interesting pattern that can help us confirm reversals. And you can see some examples of the four main doji patterns. This is a doji, it looks like a cross. You have a long-legged doji, a dragonfly doji, a gravestone doji. And all of these, you'll notice that the open and the close are at the same price or about the same price, indicating a battle between the bulls and the bears that ended up pretty much a draw. And these patterns are oftentimes present at reversals. They indicate indecisiveness and a possible reversal. So we're going to use this pattern in today's talk, and we're going to take a look at Tom's Candlestick Doji's ranker. What I'm going to do is scan for reversals using stochastics, and then we're going to use these doji patterns, this particular ranker, to confirm the reversals, and then I'll talk to you briefly about strategies to profit on reversals, option strategies that might be of use to you if you are in fact interested in trading the reversal. All right, now I'm going to use stochastics in this particular video. You can use other reversal indicators like ADX or even RSI. Stochastics is probably the most common, and remember, stochastics is really all about measuring upside and downside momentum. And the idea is that when the momentum reaches high levels above 80 and then crosses down below, then that's an indication that there could be a sell-off, and vice versa. When the lines, the stochastic lines, cross above 20, indicating an oversold situation and a possible bullish reversal from there. So that's where we're going to start today. I'm going to pop into the tools real quick here. And notice I'm actually backtesting to the beginning of this month. It's now January the 29th as I record this. And let me just take you through the process. It's really about mixing two rankers together. So I'm going to go into stocks and stock rankers, and I'm going to go into, let's try that again, stock rankers, and I'm going to pull up stochastics. So remember, in stochastics there's a lot we can do, and for a bullish signal, what I'm looking for is the %D, that's one of the two stochastics lines, to cross above 20, indicating a possible oversold condition that is about to turn around and move the opposite way. So and of course I can use other indicators. I can use the %K crossing above the %D for bullish. I could also use %K for bullish above 20. Feel free to hop into the help button if you want to learn more about that. And remember, I also have a video on stochastics in and of itself, so feel free to watch that video if you want to know more on stochastics. But as of January the 2nd of 2019, I want to find out which stocks are poised for a bullish reversal from a bearish pattern in the S&P 500. So I'll click the search button. Very fast scan. It comes back and it will give us the 18, in this case, the 18 stocks that all have a bullish reversal on according to stochastics. So that is one indicator. In and of itself, it's pretty reliable, but what I want to do is fine-tune it and sharpen the edge by saving the top 18 of these stocks into my stock list by clicking Replace. So click the Replace button and you'll notice you'll get a message on the top of the screen that says these 18 ranked unique stocks were saved in my stock list. So that's our holder list. These are our reversals, or bullish reversals, as of January the 2nd. Then what I want to do is take that my stock list and pop it into candlestick dojis. All right, now there's a lot here. Now the doji patterns that may be mixed with other Japanese candlestick patterns. If you want, click the help button and pop into the help, and you'll notice here that there's really a lot of education about the doji patterns. You've got bearish patterns, including the green candle along with doji. You've got other patterns like bearish engulfing and bearish harami, bullish patterns, doji reversal patterns, the ones I just mentioned, hammer patterns. You can look in here with some more fine tuning about how to analyze these patterns. There's really a lot of right in the actual help. You'll notice also that for each of the signals, it talks about the trade implications and possible trades. And of course, I'm looking for the doji patterns, the reversal patterns, and you can see for each of these, it tells you trade implications as well as possible trades. So that's a really very, very comprehensive help file. Please feel free to use it. In my case, what I want to do is go into the take my stock list, which has 18 reversals, bullish reversals, and then I'm going to run through the doji patterns to see if I got a confirming doji reversal pattern. I could also use bullish patterns here, hammer patterns and gaps. Again, you can use any of these really. I'm going to look for the doji patterns in this particular case. I click my search button, and only one comes back. And now that's a good thing. You don't want to have a lot of potential. Well, more opportunities is good, but really it's perfectly fine for us to find one trade. So this particular stock, Gartner, IT is the symbol. We've got the chart, the picture, the news, various other information here. If I click the pick button, it'll pop me right in to the chart, and you can see that right here, as of the day of the scan, we have a doji pattern. Does that that would confirm a reversal? So we've had a bearish move. Stochastics has actually moved up. If I want to take a look at stochastics, I can go ahead and click the chart button, and let's just see what's confirming this potential bullish opportunity. And let's pull up the chart. Let's take a look at IT and see what we got. So there's the chart. You can see also that stochastics has signaled a bullish reversal. My volume is shown there as well. So those two things together have been confirmed. We've got our doji pattern right there, our doji bar. We also have one a couple of days ago as well, and we have stochastics telling us that this stock is ready to run up. On the day of this scan, on January the 2nd, the stock was trading at 125.85. If I was to go to the latest date, which is today, the 29th of January, you can see that's actually risen quite a bit since we got in right here. All right, so the stock is still in a bullish pattern, and we certainly would have made a bit of money on that using basic options analysis. All right, so just to summarize, what we do is you scan for stochastics. You can use RSI, you can also use ADX, but what we did just now is we ran against the S&P 500. We look for a %D cross above 20. Those are the bullish reversals. We click search, and then we save the top 18 of those into my stock list by clicking replace. Then we took my stock list and we fed it into the candlestick dojis ranker. We selected doji patterns, which is one of the reversal patterns, and we clicked search. It gave us one particular case study, which ended up being a winner, and that's how you do it. So that's an example of how you can use candlesticks and also combine other rankers within Tom's Tools. So the next question you might be asking is, what option strategies do I use? One, you might choose to use short-term options. All right, so one of the issues with these reversal patterns is you just don't know exactly how long you're going to be in the trade. So one strategy to allow yourself plenty of time to be right and to avoid extrinsic value or time decay is to buy short-term options, 30 to 60 days of time in the money with a delta of 70 to 80. By doing that, by going in the money, again, you squeeze out time value or extrinsic value, which reduces your time decay risk. If you feel like the move might be fairly imminent and you want to use out-of-the-money options and maximize your return on investment, then consider the basic option strategy of buying longer term out of the money options, 60 to 90 days, with a delta of around 30 to 40. That's sort of the sweet spot, and you'll get more return on investment. You're going to want to see the stock move a little faster. So that's a valid strategy. You also might just want to sell out of the money credit spreads, 30-day options that will give you more probability, less return on investment, but more probability. So those are 3 particular option strategies. There's many more. That's candlestick dojis, and coupled with stochastics. Feel free to experiment, have a lot of fun. Wish you all the best, and I'll see you next week.